But meanwhile, going across to our corporate conversation this morning, we're looking at BEML. They reported a flat revenue at 634 crores with a reduced net loss in Q1. The management expects 20% revenue growth and a doubling of order book to over 22,000 crores by FY26, driven by large tenders, including Mumbai MRVC and key rail orders. Before we speak with the management, Anushi joining in to set it up.
Well, thanks for that, Tamanna. So, as you just mentioned about it, it's the outlook which is interesting to look out for BEML. And this mainly pertains to the railway business as well, which in FY25, if we had seen, defense was the kind of the growth lever that we are looking at. So how railway performs is something that we should be watching out for. In fact, if we are seeing the quarter, how that went by, we are looking at a flat revenue growth for the quarter, while net loss did see about a reduction to 64 crore. In terms of now how the revenue is going to shape up, a 20% is the kind of growth that could be expected for FY26. This is also be driven by the sustenance sales, which is there, which includes spares as well. In terms of, the margins, now here the management is anticipating a 150 basis points of an improvement in their margin profile. Q1, Q2, Q3, Q4 becoming the upcoming quarters where, more emphasis on how the margin profile improves is going to be something that we should keep an eye out for. In terms of order book, now this is an interesting one, considering that they're eyeing for a 22,000 to 23,000 crore by FY26 end. This includes some large tenders as well, and this particularly comes from the railway side of the business that we are looking at. This execution also playing out for the Bangalore side of the picture that we are looking at. So a lot of levers in place for the company. How it pans out, how it leads to the kind of segment mix also in terms of defense, mining, railways is something that we need to keep a track of.
Let's pose, Anushi, thanks for that. Let's pose all of those questions to Mr. Shantanu Roy, Chairman and Managing Director, BEML. He joins us right now on the show. Mr. Roy, great having you. Thanks for joining in. We usually talk to you while you're seated next to us, so this is a different experience, but good talking to you nevertheless. From what Anushi was saying, Mr. Roy, just wondering, after what has arguably been maybe a lean August period in terms of inflows, considering the high standards that you set for the order inflows, is it the upcoming season that people should look forward to for order inflow into BEML, or are you not perturbed about order inflows because the order book itself is pretty strong?
Hi, good morning. Always a pleasure to be, talking to you.
Thank you, sir.
I'm not at all. First of all, I'm not perturbed. Number two, we are very much focused on the order inflow. I mean, we are not complacent about the order book that we currently have. So the order book currently is at an all-time high, more than 16,700 crores, out of which 65% is rail and metro, 26% defense, 9% mining construction. In the current financial year, we are looking at a further order inflow, which will be at least 50 to 60% of the current order book, out of which 50% should come from rail metro, 25% each from defense and mining and construction. So order book, till today, the order this year, order inflow has been pretty good, around 3,000 crores, which is quite okay. And the coming 2 quarters, we expect some more good orders from defense, from rail and metro. Some metro tenders will be finalized in the coming 2 quarters. So order book is definitely our focus, but at the same time, our major focus is on execution. With this kind of order book, the execution has to match the order inflow as well, so as to have so that we can have a growth of minimum 20% over last year's in terms of the top line. And I'm pretty sure that as far as the bottom line is concerned, the EBITDA, the 150 basis points that we have aimed for in the current financial year, 150 basis point growth, that we should be able to achieve. So this year is entirely on execution, the challenges on execution, and how to ramp up our supply chain, how to indigenize, how to support and stabilize our indigenous supply chain. These are our major focus areas.
Roy, just The last time that we spoke, there was some talk of this large Maharashtra tender coming in on the railway side or the metro side. I mean, what's the update there? By the way, I never meant to say that you're complacent. I was just wondering that considering the past order flows, the August flows were a bit, how do I say, for lack of a better word, muted. But what happened to the Maharashtra order, Mr. Roy? We were talking about it. I don't know if something's happened there.
The Maharashtra tender, I'm sure you are referring to the Mumbai Rail Vikas Corporation, the MRVC tender for stainless steel EMUs. No, it is very much there. We expect the tender should be out anytime, and it's a huge opportunity size. Only thing is that it will take some time to reach fruition, and I see a time span of around 6 to 8 months, within which time this tender should be finalized. It's a huge challenge. It's a big order, and it will be spread over at least 6 to 7 years. The first 2 years being on the design and the proto supply, and after that total supply period of 5 years.
Very good morning, Mr. Roy. Tamanna here, and obviously always a pleasure to speak with you. Just a couple of points on the Bangalore Metro project delays and the Bharat train set orders, which we had seen. Are those now easing out? What is the outlook over there?
Bangalore Metro train set, there has never been a delay from BEML side. They are very much on track.
Yeah, the execution, there was some execution delays. Are you looking at all of that in place?
There is no execution delay from our side as far as the Bangalore Metro is concerned.
Okay.
Bangalore Metro, there are 2 orders. There is another order on another rolling stock manufacturer. So you may be talking about that. But as far as BEML is concerned, there are absolutely no delays. We are on track. In fact, in September, we are planning to roll out the first metro, the first train, which is very much as per plan. And this year, we are supposed to roll out 20 train sets. We are trying our best to roll out 20 train sets, and we will do that. We are on track as far as Bangalore Metro is concerned. As far as other projects are concerned, for example, the Chennai Metro is very, very much on track. The design process is happening very fast. The procurement is happening very fast. It's on track, much before time, I would say. And we expect that the proto, which we are supposed to deliver sometime early 2027, we should be able to advance that. So execution, as far as the metro is concerned, metro is going on fine. Absolutely no challenges, because metro we have been doing for the last 20 odd years, more than 20 years. So the supply chain is quite well established.
Okay. In terms of Vande Bharat expectation, I believe there were some concerns there, or is that not the case?
No, Vande Bharat, again, there are no concerns at all. You see, the first proto train has already undergone oscillation trials successfully, has undergone CCRS inspection, and now very shortly it should be rolled out. We are in the process of manufacturing the balance rakes. We have a total order book of 10 train sets, and all these 10 train sets we expect that we'll be able to complete by December or max by January.
Now, in terms of your order book outlook, and you spoke a short while ago about how everything is on track, the order book is robust. Your targeted, your guidance of about 23,000 crores by the end of this financial year, is that on track? What are you expecting to come in the rest of the quarters?
When I say that we should be ending the year at around 22,000 crore, so first we have to reach a total order book of around 28,000 crore, out of which if we execute some 5,000-6,000 crore this year, so we'll end up the year at 22,000 crores. In the next 7 months, I expect at least, some major orders to be finalized for the metro sector. We can expect some more orders from the commuter rail. As far as defense is concerned, we are quite well on track for some orders on the combat engineering segment. which will be finalized by March. As far as mining is concerned, mining and construction, we are looking at certain export orders which should be finalized within the next 2 months, 2 to 3 months, as well as we are trying to have at least one order for the rolling stock, either the metro or the commuter rail. And we are targeting Africa, the Middle East, as well as ASEAN. So any one of these regions, we should get at least one rolling stock order. Of course, the execution will not start immediately. The execution, as I have always maintained, there is a gestation period of at least 18 to 24 months. So execution will take some time, but we will have a beginning as far as the rolling stock exports is concerned. That is what our aim is in the current financial year.
Just one quick question on the 150 basis point margin improvement that has been targeted. How is that going? Is the working capital cost coming down? Is that on track? Anything that you can add there, sir?
You see, let us look at the trend of how the EBITDA has grown over the last few years. It was around 5.5% some 4-5 years back, and now we are at around 13.2%. Which is a pretty decent growth. And in the current financial year, when we have targeted 150 basis points, so it is based on two factors. Number one is the first factor is the growth in the top line, and the second factor is a focus on the working capital, so that we are able to reduce our overall working capital by way of focusing on reducing the inventory and reducing the debtors, as well as rationalizing the design of various products, so that there is a saving in material cost. A 1% saving in material cost leads to a huge positive impact on the profitability. Our target this year is to reduce the material cost by at least 2%. So these are the measures that we are taking. And by this, we are pretty confident that we will meet the EBITDA aspirations.
Mr. Roy, just one very quick follow-up. Does the GST change have any impact on your procurement costs, etc. at all, or any impact on you as a company?
I don't think so, because it's all input credit. It's a pass through.
Nothing at all. Okay, fine.
GST, we get input
nothing
credit.
on the output either, right? Nothing for you, per se. Okay.
No.
Fair call. Okay. Thank you so much, Mr. Roy, and all the best for the quarters ahead. Really appreciate your time.
Thank you. Thank you.